Hello and welcome to a brand new episode of Smart Money, your favorite weekend show. Now this week we have the much awaited show where we talk about what are the themes that you should invest into, what are the stocks that you should look at as the Nifty hit that 18,000 mark this week. And I have with me right here in the studio Gurmeet Chadha, Managing Partner and Chief Investment Officer at Complete Circle Consultants. Gurmeet, thank you so much for being with us here. You know, the equity cult is back in a big way, right? You can see it on the screen, you can see it when you go out. Tell us, how does one approach it?
So, Sonia, I think it's good to be on a day when markets fall and discuss, themes and ideas. So we broadly think that, three things on the balance sheet, which we say individual balance sheet, Indians are buying more houses and cars. Corporate balance sheet, they are spending, doing capex. Government balance sheet, they are spending. So the confidence around all three balance sheets are high, which augurs well for a few things if you club around them. So I think mobility, home improvement, manufacturing, because India is now recognized and expanding the footprint there, defense, and why we are here Friday evening discussing financialization of savings. So these are the five themes. I think if you bucket it well, there are some interesting long-term ideas there.
Okay, I know that viewers are, waiting very keenly to talk about the stocks, but I also want to discuss that big theme, right, which is that corporate profitability to GDP ratio is now at a decadal high of 4.3%. We haven't seen this in a while. Do you think it can only get better from here? And before we start talking about the big themes, what's your view on how much the market could capitalize on that?
So you're right. I think the profitability, not only is the profitability better, the health of the balance sheet is better. Look at the deleveraging which has happened in a lot of names, commodity names, energy names, courtesy the cycle we've got. Look at the bank credit growth. I've not seen 15% credit growth for a long, long time, right? And when was the last time you saw Nasdaq down 5% and Indian markets showing a lot of resilience few days back, right? So I think it will reflect, I think the Nifty earnings estimate, if you are still able to, a softer growth of 7 versus 8 and nominal at 12, I think Nifty EPS should still be 1,000, which means on a valuation, you're still at 17, 18 times, while we are premium, right? But if you see a 10-year average, it's still 17, 18 times. So we are in the fair zone. We are not in the... So as, if there are earning upgrades and as commodity falls, probably some consumer user companies will come into picture. My sense is there could be selectively some earnings upgrade coming, which can lead to some, further re-rating.
Okay, further re-rating likely, there could be earnings upgrade, but let's now talk stocks, right? So with the Nifty at 18,000, what are the big themes to watch out for? That's the big question. You have titled it Digital Compounders, right? So just take us through the big themes and then we'll drill it down to specific stocks.
So as I said, I think one big theme we are seeing is this mobility, theme which we call, and this mobility is not just about we buying more vehicles, whether those are PVs or SUVs now. It's also about the fact that how this per capita increase in income is translating into more discretionary consumption. There is some pent-up demand as well. So now we are seeing a few long-term trends in mobility. One is the premiumization. So you want to buy more SUVs now. The mix is changing, and it's reflecting the changing lifestyle there. So you want to, we want to capture the entire ecosystem, which is a movement towards SUVs in the overall mix, within SUVs over electric vehicles as things pan out, and the guys who will provide that ecosystem, the component makers and all. So I think there is probably there are a lot of companies which can really disproportionately grow their market share, and that's where probably the delta will come from. So that mobility is our theme. The second is home improvement, which I was talking about. I think we want bigger spaces. Our 9-year house registrations in India current registrations are 9-year high. Mumbai was an all-time high last month in terms of house registrations. So we are buying more homes. We are, probably
bigger homes,
better homes, translating into this home improvement theme. Third is manufacturing. I think a lot of Indian companies increasing their footprint in electronics, APIs, chemicals, defense, courtesy what is happening globally. I think everybody wants to be more, self-dependent. And the last one, which has always been my favorite, is growing equity culture and the financialization of savings,
Okay, so all these are the themes, right? Just for the benefit of our viewers, there are 5 big themes that Gurmeet is focusing on. There's mobility, there's the manufacturing theme, there's defense. Of course, we've seen huge wealth creation there already. There's home improvement and financialization of savings. I think this has been a theme since the pandemic that you've spoken about, and it has done very well. Let's start with the first theme, mobility, right? You spoke about how everyone's looking to buy SUVs. the stock that comes to my mind is M&M. I mean, they have a swanky new SUV in the electric vehicle space, the XUV 400. In fact, we have images of that right behind, and it looks pretty. But these are stocks that have already rallied quite a bit. So do you think it's a bit late in the game, or is there still more to go?
See, some of the gains obviously are front-loaded. Whenever you're coming out of a 5-year cycle when auto hasn't done well, right? So look at Maruti, Bajaj, M&M. If you see the 5-year returns, they are still probably will be single-digit, right? So I think since you spoke about XUV 400, the stock price of M&M are also been, so they launched the model with fun, fast, and fearless. I think that's how the stock has been, right? Very fast and fearless, in the way it has approached. So I think
lots of fun for people who could capitalize on it.
Absolutely, and still at about 18 times FY24 earnings. So while we get carried away from 800 to the movement towards 1500, it's still 18 times, about 8 times EV by EBITDA, so reasonably valued. I think there are 4 trends in M&M. One is this, back-to-back successful launches. I think they've done a great job with Thar, with XUV 700, now Scorpio N. Second is the ramp up in production. So from 25,000 units, I think they'll get to about 35,000 with Scorpio N adding another 5, 6, and they're ramping up. Third is their clear market leadership coming in this SUV segment. They've captured the trend well, and now by FY25 they want to be the leader there. And fourth is re-rating due to the EV. Currently it's not in the price, but the XUV 400 they want to target the C segment. So Nexon is B segment, and XUV 400 is the C segment where it's a slightly better range, better features, etc. And I think the tractor segment, which is again the bread and butter, second half should be much better. I think
they in fact said that the B and C SUV segment combined has a market of almost 98,000 per month.
Absolutely.
And they're looking to sort of capitalize on that market. But when you buy an M&M car, right, obviously there's someone making the tires, there's someone making the wires. So in the auto ancillary space, anything that makes sense to you?
Yeah, it's an all-time favorite, which is Uno Minda now, was Minda Industries earlier. I think what I'm impressed is the way they have increased the kit value per car. Clear focus on premiumization. If you see their order book, 53% is now EV. So they're EV ready, plus they have a portfolio which is EV agnostic. So, which is alloy wheels, car seats. If airbags tomorrow become compulsory, like 6 airbags, they have 15% market share there. So their bread and butter business, which is switches, castings, lightings, continues to do well. And they add premium products. So airbag, for example, the margin is 25%.
Wow.
One airbag is like $5,500. So if they can clock 12,000 crore sale, with a bit of improvement in operating margin, I mean, the EBITDA can actually become 2x over the next 2 years. So there's still juice there, despite the stock being probably 15 bagger in the last 5-6 years.
Absolutely. Okay, that's the first theme, right? Mobility, in case you missed it. There's M&M and there's Uno Minda that Gurmeet likes. Let's move on to the second theme now, which is manufacturing and this China plus one. Now, this has been a theme that has worked for a while. From here on, what are the stocks you're looking at?
So I think there are plenty, but in the interest of time, we'll discover, few. So one obviously is India's play on consumer electronics. I think Dixon is one name which comes to mind, which India's, dominance coming in consumer electronics. I think the mobile segment, in my view, can still deliver 40-45% CAGR. So over the next 3 years, which can translate into, huge volumes. They're adding more labels, more names. Secondly, the consumer durable was a little soft, but I think that will come back as we progress. Also, his product mix is changing. So from ODM, which is from OEM, which is original equipment manufacturing, where you only make as per specifications, right? So the margin is low. But in an original design manufacturing, it's your finished product, and then somebody takes the label, right? So that mix is changing. So he does both OEM and ODM. And I think that this EMS, which we call electronic manufacturing industry services, it's a $24 billion industry. Dixon is still 4%. Wow. So that's why it commands that 40-50 multiple, because the market, gives you that. So I think it's a great play on how this, manufacturing of electronic footprint India is becoming. 5 PLI approvals already, so that's adding to the kitty. And good balance sheet. ROC has been around 24-25%.
Okay, this is a well-discovered stock, right? Anything else that perhaps the street should know in this space?
So one slightly, value play is Tata Chemicals. I think it's not got re-rated like the others in this space, which is a PI or a Deepak Nitrite and Aarti and some of the others, still at about 15-16 times earning. Okay. But now, so it's 75% is base chemicals, which is your soda ash. It's the third largest globally on soda ash, sodium bicarbonate, etc. So this is basic chemistry. So this is 75%. 25% is specialty chemicals, right? So specialty chemicals, they are into, agrochemicals, which is through Relis, etc. And then they are getting into the new age chemicals. Soda ash, the prices might remain firm for next 2 years because there's no greenfield expansion coming for next 2 years.
Okay.
Right, so that could be a big play there, and the mix is changing more towards specialty chemicals there, and they're trying to go more downstream, figure out more values. Also on new, EV-related, battery-related parts. A lot of plans there, and as I said, just 15 times earnings.
A lot of value-added products.
Absolutely.
Okay, well, we need to take a short commercial break, but I know you're itching to find out what the other themes are. Don't go anywhere. We'll be back with Gurmeet in just a bit.